What y'all talking about? What y'all talking about? What y'all talking about? What y'all talking? What y'all talking about? What y'all talking about? What y'all talking about?
If you ain't talking the real, then we ain't gon' talk to ya.
What y'all talking about? What y'all talking about? What y'all talking? What y'all talking about? What y'all talking about? What y'all talking about?
If you ain't talking the real, then we ain't gon' talk to ya.
We're back with a different topic. WYTAP, we're back. Yeah, I'm loaded up. So we we gonna do another one right now. T-Hoof. Anthony Hoof. So look at here. This time we're coming to you speaking car insurance. What you should have on your vehicle. Then I'm going to talk to you from a claim examiner's side on what you should do from a car accident.
I'm just going to learn.
So, just to introduce people in case you don't know, how do I get rid of that? There we go. In case you don't know, this is my husband. Shamark Dalton. Say hello to the people, baby.
Hello.
So, I know my husband. Some of y'all may know my husband, but other people may not. So, Mr. Dalton, we're going to be professional on this. Tell us about yourself. Speak loud so they can hear you.
I'm a licensed insurance agent, and I've been doing auto insurance for about 16 and a half years.
Okay.
I'm licensed in 28 states, including the Northeast, Southwest, West, Midwest, and I basically sell insurance for a big company, so I've been doing it for a while, and I've got a lot of experience in that, a little bit of customer service, a little bit of claims, but mostly sales.
And he has the gift to gab, so it works out great. So, Mr. Dalton, let's start with this. When you purchase a brand new vehicle with 0 miles on it, what should people get on their vehicle?
Well, for starters, if you are getting a loan on that car, if it's like a finance or a lease, there are going to be certain coverages you're going to be required to cover, or carry rather. In most cases, when you're leasing a vehicle, you have to carry not only liability, but you got to carry collision and comprehensive. So collision coverage pays for damages to your car, and that's if you have an accident and you crash into another object, like a fence or another vehicle or guardrail. And you have comprehensive, which covers your vehicle typically when it's parked for things like fire, theft, and vandalism, and it covers you if an animal jumped out in front of you. Then you have liability, which is basically covering you if you were to have an accident and you're at fault. Liability is going to pay for the injuries and the damages that you cause to a third party. So when you're purchasing a brand new vehicle, ideally it's a great idea to have full coverage, whether you're financing, leasing, or buying in cash. Because if you're buying it in cash, your vehicle is still collateral for you. If something happened to it, you don't want to lose all the money you invested in it. So if you have a car that's, I would say, typically at least 7 years or newer, we recommend you carrying full coverage. And the term full coverage is not really a legal term. It's actually a street term or generic term.
Okay.
Full coverage means you're basically covering yourself and your car, as well as covering yourself if you hit somebody else.
Now, when you say liability, break it down further for the people that may not know exactly, because you're talking insurance language right now. Property damage, personal injury protection, which is known as PIP. Yes, I worked in claims, people. All right.
So every state is a little bit different. There are some states that don't require you to carry property damage, for example, like Florida. Actually, bodily injury, it's not required in Florida. But a state like New York, I'm using New York as an example. So liability consists of...
The most expensive place ever for car insurance.
Pretty much. But liability consists of about 4 or 5 different coverages. And think of it this way. You have an accident, one or two things can happen. You can get injured and somebody else can get injured. Your car can get damaged and the other person's car can get damaged.
Mm-hmm.
So liability essentially is the bodily injury, which is covering the injuries for the other person that you had.
Now, what should they have for bodily injury? What should a person have? Like, let's give numbers.
Okay, so bodily injury in New York State minimum you can have is something they call a split limit. And the split limit means that you have a per person limit and a per accident limit. In New York State, the lowest you can carry is $25,000 per person, $50,000 per accident. Now, I personally will tell you this. Your premium is going to be higher when you have a higher limit. You can go from $25,000 per person, $50,000 per accident, to $50,000 per person, $100,000 per accident. You can go up to $500,000, $1 million. Most people get a minimum limit if they don't have any assets, if they don't own a home, if they're younger, they don't have a job where they make a lot of money. You'll see typically younger non-homeowner people carry the minimum limit. If you do own a home or you have a job where you're making good money, I would say anywhere over $50,000, $60,000 a year, it's a good idea to probably bump those coverages up to at least maybe $50,000 per person and $100,000 per accident. If you're a homeowner, you really shouldn't carry less than $100,000 per person.
If you're a homeowner, get umbrella policy, people, but we'll talk about that later.
Yeah, the reason why you want to go higher with your liability if you have an accident and you have assets or you own a home is because if you have low coverage and you have an accident and somebody hits you, you hit someone and you're at fault, if your insurance company is only pay out, for example, $25,000, but the person is suing you for $50,000, well, the question is, where's the rest of the money coming from? And that's where you are personally liable for anything above what your insurance company is going to cover you for. So the insurance company is only going to pay up to the covered limits. So if you have a limit of $25,000 per person for injuries and then $50,000 per accident, and you hit somebody and they're suing you for $100,000, that gap is going to come from you. Now you can say, well, I don't have any money. You can't squeeze, blood out of a sore and all those other things. But the one thing people don't realize is that not only can you be sued and lose your assets, but you also can have wages garnished. So a judge can put a judgment against you where you're working for somebody else because you don't have enough insurance, and they're literally gouging your wages until you make up that deficit. Now, we really were talking about bodily injury. The other coverage for liability is property damage. And property damage is going to cover the damages that you cause to someone else's property. Now, the minimum in New York State that you can get for property damage is $10,000. You got states like New Jersey where you can carry as low as $5,000. I would not recommend going that low. If you take a look at the car that you drive, let's say you're driving a 2015 Honda Accord, right? That car could easily be $12,000, $13,000. You wouldn't want to cover yourself for liability less than what your car is worth, because if you hit somebody driving the same exact car as you,
or expensive,
and your car is totaled and their car is totaled, well, your car is going to be covered if you have a collision, but your property damage is going to pay for that other person's car. So if you hit somebody's car and their car is worth $15,000 and you total it, but you're only carrying $10,000 worth of coverage, that other $5,000, well, where's it coming from? And that's when they're going to sue you. And the difference is very minimal. I mean, I've sold policies where people want to save, as much money as they can, but they're literally paying $2 or $3 more per month just to go from like $10,000 to $25,000 or $25,000 to $50,000. And again, we're talking property damage. You hit somebody else's car and you're at fault. So I would say you really shouldn't carry anything less than 25, even though the state allows you to carry 10 in New York. Because if you think about it, the average car nowadays, brand new car, can be anywhere from $12,000 to $20,000, depending on what kind of car you get. And again, this is talking about covering somebody else if you hit them. You got states like New Jersey that allow you to go as low as $5,000 for property damage, but
that doesn't pay nothing.
Definitely don't want to get $5,000. $5,000 not going to cover anything. But some people don't have a choice. They, if you're young and you're inexperienced, your premium is, going to be higher if you don't have a good driving record, if you don't have a lot of experience. Some people don't have a choice but to get a lower coverage to save money. But when you do the math, a lot of times if you ask your insurance agent, just tell me what it would be if I get the next limit, you'd be amazed how cheap it is. I get people on the phone all the time and they tell me how much they're carrying. And then I tell them, well, if you just bump it up just one level up, it's going to cost you another $3, $4, $5. They're like, oh my goodness, I can't believe that. So a lot of times these agents don't really educate their customers on what they're carrying and don't tell them the minimal difference in their premium just by increasing it. So you should always know which coverages you have. You should always try to protect your assets. You should always make sure that you're covering yourself, because if you don't have enough coverage, again, you got your house is at stake, you got your retirement funds at stake, you got your 401k at stake, you got your future wages at stake, a lot of things. And of course, any assets that you have are vulnerable to being taken in the court if you're not carrying enough coverage. Like had an example where you were hit by somebody who didn't have a lot of coverage.
Didn't have a lot of coverage. I had 2 herniated discs, a bulging disc, a pinched nerve, and sciatic acting up. And they did not have the proper insurance on their vehicles. But when you purchase a brand new vehicle, you should get the gap insurance on it. Now, why should they get the gap insurance, Mr. Dalton?
This is important. So if you never heard of gap insurance, think of
I never heard
if
of
you purchase a car and you're financing it, everybody knows you're paying interest on this car, right? So you might get a $20,000 loan, okay? And let's say, you're gonna try to do simple math. Let's say you get a loan that's like 10%. So you're paying, another $1,000, $2,000. I'm just throwing numbers out there. If something happens to that car before you pay that loan off, the bank that you got the loan from, they're gonna want all the interest that was calculated over the course of the time you had the loan.
You still gotta pay.
So, if you're making payments on this car for a year, right, but you still have 4 more years to go and the car gets totaled, the insurance company is only going to pay what the car is worth. They are not gonna pay any interest. So if your car at the time that it's in an accident is worth, let's say, $15,000, but you still owe the bank $18,000 because of all the interest, well, the bank is gonna want that extra $3,000 because that is money due to them based off of the interest that they're charging you on that loan. So what the gap insurance does is it covers the gap between the actual cash value of your car, which is what they're paying out for your car at the time of the loss, and the interest that's accumulated on top of that. Gap insurance is very inexpensive. I mean, I've seen them as little as $75, usually a one-time fee, $50, $75, $100, but whatever it is worth that extra money, because if you don't have gap insurance, I'll give you a perfect example. One of my friends, she just had an accident, BMW 2012 or 13 BMW. The car was actually totaled out, and the value of the car was about $6,000 less than what she owed on a bank loan. And because the insurance company considered the car a total loss and she did not have gap insurance, she had to pay that extra $6,000 out of her pocket to cover that gap. So they call it a gap insurance because it's filling a gap between the loss of the car value and the loan value, which is including the interest. So when you're getting a finance car, get the gap insurance. The gap insurance is only really relevant for finance because the finance, you're making payments on the car to keep the car. The car is yours, but it's not yours completely until you pay the loan off. So you're always going to be accumulating interest over the course of that loan. But if the car is considered a total loss, whether it be an accident or theft or a fire or vandalism, the insurance company is not going to pay for more than what the car is worth, and they are not going to pay your interest. So the gap insurance you can ask for that through your insurance company. You can ask for gap insurance through a lot of local insurance companies or local insurance agents offer it, and you could also get it at the dealership that you purchase your car from.
Wow.
Do not take that car off the lot without gap insurance if you're
has to be 0% on the odometer.
No. You can get you can gap insurance. Doesn't have to be 0 on the odometer. You can get it on a used car.
Really?
Yes. If you could, as long as the car is being financed, you can get gap insurance on it. Now the price may vary depending on the value of the actual car and the value of the loan, but you can get gap insurance on the used car.
Okay. So now that's something good to know. We want to bring as much knowledge as possible. What else on your part what about personal injury? What percentage should you have on personal injury?
Well, personal injury protection in most states is a mandatory limit. So New York is a limit of $50,000, the minimum you can get.
Okay.
Personal injury protection is covering the medical expenses for you and all the people inside of your car. So if you were to get a policy in New York, you have to have a minimum personal injury protection limit of $50,000. But that $50,000 is actually paying for each person in the car. So each person in the car gets that $50,000. If you have 3 people in your car, everybody in the car gets $50,000 each. And it pays out over the course of time. If there's an accident and you get injured or anybody else get injured, you might be getting physical therapy. You might have to have other medical procedures done because of the injuries. All that money is coming out of that personal injury protection limit. New York does give you the option to add additional personal injury, like an additional $50,000 or
you can add additional. That's good to know.
You can add additional personal injury protection. There's other coverages in New York you can add, such as coverage they call optional basic economic loss, which compensates you for an economic loss due to an accident, like if you're out of work, you need a nurse, you need somebody to drive you around to take care of business because this accident puts you in a position where you can't do what you normally do on a day-to-day. Then you got states like New Jersey that have personal injury protection as low as $15,000, as high as $250,000. Again, the more coverage that you purchase, the more you pay. It's not as much as you think. It's all incremental, but I definitely wouldn't carry less than $50,000 if I lived in New Jersey, because New Jersey allows you to go as low as $15,000. New York, you have no choice but to get a minimum of $50,000. There's an option to add some extra personal injury. New York State is actually a fairly, easy state when it comes to coverages because it's not as complicated as states like New Jersey, like in Florida. In Florida, you can legally drive without bodily injury coverage. Like, you can drive a car legally and not have coverage to pay for the injuries to the other party. So you can get hit by somebody in Florida.
Stay out of Florida driving.
That they don't have bodily injury. So if they hit you in their fault and you're hurt, you're going to have to go after them personally. You got states like New Hampshire where you could legally
New Hampshire you don't have to have insurance. People, listen. Have some insurance. Okay, if you're going through New Hampshire, make sure you're driving with someone with insurance, because if you jack up your car, you in trouble, boo-boo. You in trouble. Because if somebody hits you and they don't have insurance, you already know. So now, let's talk about Massachusetts. I already talked about it with child support. How is Massachusetts? Because we know Massachusetts makes their own laws, people. Makes their own laws. Let's talk about it. Uh-oh.
Yeah, the Massachusetts is pretty interesting. The only thing unique I would say about Massachusetts and insurance is most states, when you get insurance, they use your credit, they use your age, they use your sex, male, female, your marital status. Massachusetts is one of those states where insurance companies can't use your age, your credit, they can't use your marital status or your sex. So if you're young, for example, where most states you're going to pay more insurance because your age, Massachusetts, they don't evaluate for your age. It's not legal there. Also, they don't use your credit. So if you don't have good credit, and a lot of people wonder why do insurance companies look at your credit? Well, other than Massachusetts, because insurance is taking on a new face in terms of how they determine your risk. And most companies now, they look at your risk as higher when you have a low credit score. So you will pay more in most cases if you don't have good credit. But Massachusetts, your credit won't affect you. Your age won't affect you. Your marital status won't affect you. Your sex won't affect you. And I'm saying, when I say affect you, I mean affect the actual premium that you're paying. But in Massachusetts, your number of years that you've been driving is big. If you haven't been driving for a long time, you're going to get a pretty high premium. If you got a lot of tickets and accidents, like most states, you're going to pay a pretty high premium. If you don't have insurance, you're going to pay a high premium in Massachusetts. But I would tell you, in New York, one thing I'm going to recommend, this one thing is kind of off the record for actual coverages, but a lot of people put insurance in their name for someone else because that person they're getting insurance for is young, they got a bad driving record, they don't have a lot of experience. Don't let somebody put insurance.
Don't do it, boo-boo. Don't do it. I'm sorry.
Don't let someone put insurance in your name because they can't get a good rate, because they got a suspended license, because they got a lot of tickets, because they got a lot of accidents, because it will hurt you in the long run. I get people all the time to call and want to get a policy from me, and it turns out that they're getting a higher rate because of claims that were filed under their name because they were hooking somebody else up. Don't do it. It is not worth it. If you got to tell a person, look, I love you, I try to help you, try to give you some money if I can, but I'm not going to put insurance in my name for you, because people do it all the time. They get cars in their name for people. They go out and get a loan at the dealership. They put insurance in their name for people. People go out there and get credit cards in their name for people. And then what happens is, especially if it's a girlfriend-boyfriend situation where they break up, the person who took on the risk or the insurance in their name is the one that ends up getting the short end of the stick, because now they're paying for it years down the line, and it is not a good look for you. So I would seriously encourage you, do not put insurance in your name for nobody, not your brother, not your mother, not your father, not your sister. I don't care if they're family. If it ain't your spouse or your child, don't do it. And anybody who's driving a car that's in your name, you need to have them on your insurance. So if you go out there and put a car in your name, registered in your name, and insured on your name, but you got somebody else driving it, put that person on your policy. And if you don't want them put on a policy, don't let them drive the car, because it's going to come back to you tenfold. And I do this all the time. I know a lot of brothers who do it. I'm saying brothers literally, but I know a lot of people who do this, and they're kicking themselves down the line because then they end up can't get insurance at all, or they're paying more than they should be paying, or they're dealing with some sort of liability against them because of an accident that somebody else caused because they put insurance in their name for somebody else and they're not even driving the car.
Are you done? Because you shut me down.
Yes, I'm done.
This is why my husband will not be up in this studio. He be killing my vibe.
Man, but I'm over here learning. I'm
learning. I know it's insurance, but we here to joke too, you know.
I know, but he was getting
I know.
He was
but
getting
you saw how quick he cut me off, like yo.
Because he wasn't finished.
Don't interrupt. Ow!
So, I got a question. Like, I used to live in my mother's house. Okay. She got insurance one time, and they tried to make her add me on her insurance because we lived in the same household. Yeah. I don't know what that's about.
Did you have a license?
I had a license.
Yeah, so that is a very common procedure from most companies. I want to say most. A lot of companies do that. If you live in a house with other people that have a license, some insurance companies are going to make you go on there no matter what. So, for example, you have Joe lives with mom, and mom's got a car, and that's the only car in the house. But insurance company A wants mom's son, Joe, to be on the policy because he's a licensed driver. Now, every company is a little bit different. There are some companies that only require that based on the age of the other people. Mm-hmm. So, for example, you have some insurance companies where if you have someone else in your house and they're of youthful age, which usually is considered like 16 through 23, 24, they're going to make that driver go on your policy unless they have their own insurance. Mm-hmm. There are some companies that are going to require other people to go on your policy if they are 23, 24, 25. I've seen it up until 29 years old. If you have a person in your household with a license and they're not insured, but they're up to the age of 29, there are some companies that will make them go on your policy. Now, the reason they do that is because insurance companies look at any drivers in the household as a risk. And as long as you're in the house with a license, their concern is that there's always a chance for those other drivers to get in the car and drive it. And if those other drivers get in the car and they have an accident, the insurance company has to pay for that accident, whether they're listed or not. So the insurance company, they want to take on a premium to account for that additional risk. Even though you may not drive the car, they got to look at it from the standpoint of cover themselves. So it does happen a lot, but it's usually more common when those other drivers in the house are younger drivers, like I said, teenager, up to the early 20s in most cases. There was a point in time where I used to work for a company that anybody who's in the house going on the policy did not know what the age was. And the only way they wasn't put them on there is if they had their own insurance. But there's a difference. So it's not that way with every company. Every company is a little bit different. Okay. But New York is pretty tough because New York, there's a lot of insurance for the New Yorker. For every person in New York that's legitimate with, who they're driving around, who owns the car, who's driving the car, where they live, there's 2 or 3 people that have an insurance in their name, but they're not the driver, who's insuring a car at an address that they don't live at. And even to the point where that person who's driving the car may even have a suspended license and the insurance company doesn't know about them. So the insurance companies are a little bit more proactive now in trying to prevent from paying out on an accident that they weren't getting a premium for. But basically, it'd be like a bank giving a loan to someone who has horrible credit because they're using the credit score of somebody else. The bank is going to charge you a higher interest rate if you have bad credit, right? So if I want to buy a car loan, for example, and I got messed up credit, I'm going to get a high interest rate. Everybody kind of get the logistics of that. But if I put it in my girlfriend's name and she got better credit, I can get a better interest rate. But the bank is kind of losing if they're giving a loan to somebody with a low credit score because my risk is higher because they're writing a loan to somebody who the loan is not really for. So in car insurance, if they're insuring a car for somebody who's not really driving the car, the insurance company is kind of losing out. So that's why companies try to protect themselves by doing that. And I'll also add, there's a lot of people that in New York especially, they live downstate. They live in the Bronx, Brooklyn, Queens, in areas that the insurance is very expensive, Staten Island, but they're using an address in Albany and Syracuse and Westchester. Some people got insurance in Virginia and Georgia, but they live in New York. And insurance companies, they lose money because of that. So people No, they know how to work it. They'll give an address from an address they don't live at because they know the insurance is going to be cheaper. But I will tell you, I would encourage you not to do that, because if the insurance company finds out that you don't live at the address that they're rating you for, they can legally deny your claim. And I know someone who, personal friend of mine, and this is about maybe 15 years ago, who had a custom van. Van was worth probably about $18,000. And he was getting his car insured in Virginia. And the car got vandalized in New York. And when the insurance company came to look at the van, they wanted to know, well, why is the van in New York, but we're giving you insurance in Virginia? And after doing some investigating, they came to find out that the person wasn't living in Virginia, they were living in New York. So guess what? Not only did they deny the claim and not pay for the damages, but they also came after my man to get all the money that they should have been getting for the address in New York, which should have been thousands and thousands of dollars more. So it's just not worth it, man. We all got to pay our, premium based off of who we are, where we live, what kind of car we driving, what our driving record looks like. So if you could try to keep your driving record clean, you're going to get a better insurance premium than you would if you got a bad driving record. But it's not worth trying to beat the system, because in the long run, it's going to come back and hurt you. Did I answer your question?
You answered it very well.
Now, a lot of people ask that question. I get that all the time. Why I got to put my brother on there? He don't drive my car.
Right.
Now, let's talk about accidents. If you have an accident, call the police. Get a legal document from the police officer so they could document exactly where the damages were, exactly if it's fresh damage or old damage.
Amen.
Do a police report, because the person may, he or she, start with, oh no, that didn't happen that way, and think he said, she said. No, do the police report. Because if one person says one thing and the other person says another, at least the police officer can be there witnessing, be the witness to see. The judge will look at the police officer's statement before they look at your statement. So you want to make sure that police report is done correctly. When you get it, when they tell you it's time to pick it up, review it fully, because if not correctly, make sure you don't leave that police department until it's done properly. Because you do not want anything coming against you. If you're in the right and the other person's in the wrong, you don't want your insurance to be suffering.
Right.
Second, if you are injured at the scene, make sure the police officer documents that. You need a paper trail. Take photos of each vehicle. Do not move the vehicles until you take photos. However the accident happened, leave the car right there. Take pictures. If you are blocking traffic, you wait for the police officer to tell y'all to move. But you make sure when they show up, it's how the accident happened.
If I could add to that, most people assume that police report is the judge and the jury when it comes to negligence, and it is not. Just because a police report says that you were not at fault, it does not mean that the insurance company is going to say you're not at fault.
Exactly.
And that's important, because a lot of people assume that the judge and the jury is the police. No, the police usually don't get there until after the accident happened. They will give you their opinion, and they'll give you what they're, from the experience and the knowledge of who they think is at fault. And a lot of times they'll tell you, oh yeah, you're not at fault, but the insurance company is going to make that determination. Your insurance company and the other insurance company that's involved.
So you make sure you get everything documented, because that will help be evidence. Here's another thing. If you are rear-ended, you're not at fault. You have two options. You could go through the other person's insurance company, or you could go through yours, and then they will go after that other person's insurance company to get the money back and to reimburse you. If you go through the other person's insurance company, don't let that driver talk you into going to their body shop. Don't go through insurance. I'll pay for it. No, you don't want to do that, because what if they go missing? You're not going to get your car fixed. You don't have a police report with the other person's insurance company's information on it. Do not do it. Let's think smart, because I worked for an insurance company for 10 years. You know how many phone calls I received when they said, oh no, we didn't exchange insurance. They said they was going to pay out of their pocket. I'll go to their body shop. You didn't get no information on them. You didn't get the insurance card. You didn't get nothing. And it wasn't their car that they were driving. It was one of their friends or somebody else's vehicle. You're out of luck. Now you got to go through your insurance company. Don't do it to yourself. Get a paper trail. Get the proper documents. And take pictures of the insurance. Take pictures of the car. Take pictures of the license plate. Just in case they speed off. Because we've had hit and runs. They hit you, run. No, you make sure you get that license plate. Cover yourself. Anything else?
And one thing I was going to say, I clarified, is one misconception. A lot of people feel like when they are in an accident that's caused by the weather, that they're not at fault. And it's not fair. But if you have an accident and there's no other vehicles involved, it is your fault. And that's the way the insurance companies look at it. So that's one thing. You can't control everything when you're in bad weather. You want to try your best to try to drive in a way that is conducive for your vehicle, because some people get a little crazy when they got a 4x4 or they got a big sedan and they think they're a little bit invincible in the rain or in the snow or even when the sleet is out there. If you have any accident and there's no other vehicle involved, whether you hit a guardrail, whether you hit a snowbank, or you hit a fence, whatever the case might be, it is always going to be your fault. And people don't realize that. Oh no, that wasn't my fault. It was a squirrel jumped out in front of me and I skidded and I hit the side of the. No, that's
hit the squirrel. Hit the squirrel. If you don't hit the animal, you're at fault. If you hit the animal, you're not at fault. Here, now, claim side. An animal, like he said, comes running out. If you swerve and don't hit the animal, but you hit the property, you're at fault, boo-boo. 100%. That means if you damage that property, your insurance has to pay for that damage. So if you hit property and you damage it, you have to call the police officer so they could come and notify. Like if you hit the pole and damage the pole, they have to notify which telephone company owns that pole. If you hit somebody's house or somebody's fence, you got to notify the homeowner. So the simple fact is, I love animals. Don't get us wrong. We just telling you how insurance operates. It's sad but true. Hit the animal. That falls under comprehensive. You're not at fault because wildlife they do run out, and you know what I mean. Don't get yourself at fault because if you swerve and hit an item, then you're at fault, and that's under collision. You hit an animal, you're 0%. Because it was wildlife. No. They don't. They call, no. An act of God is if lightning hits your vehicle. Let me correct you, Mr. Dalton. Act of God is when lightning hit your car. I had a client. He was in his car. It was thunder and lightning. We had a major downpour. And it was like thunder and lightning to where it shook houses and the building, and we were like, hold up, what was that? Was that an earthquake? What? It hit someone's vehicle. That killed the engine, that killed everything. That was an act of God. You're 0%. If they have to use the jaws of life, the fire department, they come and use that big machine to crash in, it's a total loss. Airbags go off, total loss. So the simple fact is, cover yourself. Be aware what's on your policy. You know how many people called in saying they didn't know what they picked on their policy? And then when you tell them there's no collision, they flipping out on me. I'm like, you the one that picked your insurance, boo-boo. Why are you mad at me? Don't be mad at me. A lot, but there's a lot of people.
Man, listen.
I'm serious.
Like,
after 10 years, I've heard a lot of
Explain
stories.
what this is. Please tell me.
One thing I have a lot of people ask me is they'll pay off a car loan. You get a 5-year loan. You get a 2019 Chevy Malibu, right? You pay it off in, let's say, 4 years. Mm-hmm. Now, let me come back to a more recent time. Let's say you had a 2013 Malibu, right? And you had a 5-year loan. Now you just paid it off. 2018 passed. You paid it off in full. You got your title cleared. It's your car. You feeling good about yourself. And one of the first things people ask me is, well, now that the car is mine, now that there's no lien on it, now that I own it, do I have to carry collision? And the answer is no. But I will challenge you with this question. if you just spent 5 years investing $20,000 in the car, making payments of $300 something a month, paying interest, maintenance, and all this other stuff, and now the car is yours, why wouldn't you protect it? Because now there's more reason to protect it now because it's your car. Because if you take the collision off, which you have every right to do, remember, collision pays for the damages to your car. The comprehensive is based covering, fire, theft, and vandalism. If you take those coverages off, that means if something happens to your car and you're at fault, whether you lose control in the snow or a tree falls in your car, a deer jumps out in front of you, you have no coverage. So you spend 5 years of your hard-earned money, $15,000, $16,000, $17,000, interest included, and now you want to take the coverage off because you own it. That don't make sense. I would tell you this. I would tell my customers, if you're trying to determine if it's worth me carrying full coverage in my car, the first rule of thumb is if the car is 7 years or newer, typically I would recommend full coverage. So we're in 2019. That means if you're driving a car that's a 2012, 13, 14, 15 going up, you probably should be carrying full coverage. The car probably has some value. But if the car is older or you're on the fence, find out what the quote would be with full coverage, with the collision and comprehensive. Find out what the insurance would be without it. And when you take that price difference and you multiply it times 12, ask yourself, is it worth me paying an extra $75 a month? Is it worth me paying an extra $125 a month if my car is only worth X amount? So if I have a car that's worth, $10, $12, $13,000, and it's only going to cost me another $75 to $100 a month to insure it fully, well, if I take that $75 to $100 a month, I'm paying an extra $1,000 to $1,200 for the year, but my car is worth $12,000, so it's worth it because it's your investment. And if you don't get the full coverage and you don't pay the extra money, and that car is in a total loss, and total loss means that your car was destroyed to a point where the insurance company said it's not worth fixing, so they consider it a total loss. So they give you a check for what they call the actual cash value, which is what the value of the car was at the time of the loss. If the actual cash value of your car is such an amount where the monthly payments are adding up to less than what the car is worth, then you should fully insure it. If it's only going to cost me an extra $1,000 a year to cover myself for a car that might be worth $12,000, $15,000, $20,000, absolutely you should get full coverage. So you want to ask yourself, what is my car worth? You could check kellybluebook.com, you could check edmunds.com, you can go at any car website and just do a search, value of a car, or search for a new car value of your vehicle, and then find out what the difference is to add the full coverage, and you do the math. And I always tell my customers, do you think it's worth an extra $7,500, $100 a month to potentially get a check of $10,000, $12,000, $15,000 for your car if there's a total loss? And a lot of times they're able to make that decision based off of that.
Any questions?
Yeah, we already answered my one question.
Okay.
I told you I'm sitting back and learning.
Okay. Well, I hope this was educational for the ones out here viewing that do not know about car insurance. But I do want to say this. If it's only one vehicle you have, don't take off collision. Don't take off comprehensive. Because if that's your only means on getting back and forth to work and back and forth places, keep it on. It may be money you can save, but you don't want to do that. So this is WYTAP coming to you with some education, and I hope it helped you. And if you don't understand something, ask the person that's selling you the insurance. You rather ask than not ask. Pull off the lot and something happens to your vehicle.
And get rental coverage too. Get towing and rental if you can.
Oh my goodness, yes. If you ever have a car accident and it's your fault and you need your vehicle repaired and you have no rental, that means you're paying out of pocket, or you're taking a bus, or you're looking for a ride. Get rental insurance. And it's not that expensive for your policy. Trust me, you know how many clients I had call in saying, oh, I thought I had rental. No, boo, you don't. So no, we cannot give you a rental.
Yeah, and the rental coverage is specifically for an insurance claim. If you have rental reimbursement on your car, that means if you have an accident and your car is under repair for 2 or 3 weeks, the insurance company is paying $30, $50 a day for you to rent a car. They're not paying for you to rent a car to take a vacation. They're paying for you to rent a car while your car is under a collision or comprehensive claim. So anything your insurance company is covering you for, fire, theft, vandalism, collision, those are the situations where the insurance companies pay for the rental car. And that rental coverage is usually, like I said, just a couple of extra bucks a month, $6, $7 extra a month. I'll also tell you this, if you rent a car in any state, you don't have to purchase insurance through the rental car company because all the coverages on your policy automatically transfer to a rental. So if I'm driving the 2015 Honda Accord and I got liability, I got collision, I got comprehensive, I got towing, I got rental, and I decided I'm gonna rent a car to take my family on a trip, we're gonna go down to Georgia, I don't have to purchase the insurance through the rental car company because all of the insurance that is on my Honda Accord automatically transfer over to any rental that I drive as long as I'm renting that car within the United States and as long as I got that rental for 30 days or less. So don't let the rental car company try to force you into buying their insurance. If you have auto insurance,
that's expensive.
Your insurance automatically transfers over. Now, what you have to be careful is if you got a liability policy, if you only have liability, meaning you don't have collision, you don't have comprehensive, all you have is the minimum liability what the state requires, then ultimately that's what's going to transfer over to the rental car. So if you damage that rental car, you may have to pay out of pocket. But if you have full coverage on your car, then you know all that full coverage is going to transfer over to the rental car.
All right. We hope this was educational for you. We thank you for tuning in. And look out for us next week. Every Friday, 6 p.m. We're bringing the real. What you're talking about, nothing but real. Educational. We are setting the tone, the stage. We want to empower everyone. We want everyone woke on what is going on. We want to talk about, we want to bring it to the forefront. We want you to know. Again, if you have any topics you want us to talk about, you could go to our website. You could inbox us, Anthony Hoof or Nicole Dalton. Hoof! Or you could go to WYTAP, our Facebook page. You can email us. What's your email address?
It's Anthony Huff at WYTApodcast.com.
Or Nicole Dalton, same ending, at WYTAP. He just set it up today. I'm still trying to remember.
Nicole Dalton at WYTApodcast.com.
Yeah. Okay. So we have many more topics we're going to talk about. Many more. Many more. Many. Yes. Many. So from our house, our studio to you guys, have a great night, a safe weekend, and tune in. We may have something this week dropping. Really? Really? Okay. So now my husband got jokes since the seriousness is over. He gonna get it, y'all. He's gonna get it. But have a great night. Thank you for tuning in. Thank you for the support. If you like what you heard, like and share, like and share, like and share, like and share all day, every day. Have a great night.